Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the Trader Lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And this stream is about integrating Bookmap OrderFlow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. In addition, this stream is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab, as well as a library of webinars that describe this process. And the Trader Lab is a community of like-minded traders that have come together to leverage their collective experience in order to do better. The idea of the Trader Lab is to become shall we say, a meeting place for serious traders who are looking to build out the business of trading. And the idea of building a business is to understand how the market works, why it does what it does, and how you might get in alignment with it. Many of us who come into trading from the retail side of the business, I think imagine trading to be an indicator and a time frame based business. I'm going to suggest there's much more to it than that. In fact, if anything, approaching it from that angle really is kind of missing the whole point of how a market operates. If you understand market mechanics, you may then better be able to deploy indicators where they fit. And the other part of that is retail traders have been doing this since technical indicators came out, Wells Wilder. And when I started in the business, just a little point of reference, those indicators were just becoming available. I started in 1980. And of course, it was like, well, the Holy Grail turned up. And in reality, that's not the case, at least in my opinion and experience. Instead, most retail traders embark on a, quote, process of trying to find the right mix of indicators and timeframes, and somehow that's the answer. The success rate of retail traders who use that approach is rather poor, if you know. And I think we all believe that somehow we are going to be the exception. But the thing is, it's really reliant, I think, on the tools you use and the understanding of how the market works. How the market works is not your indicators. The market does its thing, and the output of the market or the participant behavior is what gives you the output of an indicator. Might it make sense to understand how the market works and then be able to be in alignment with the participant behavior instead of trying to define it with a backwards looking process that is random? So let's take a look. And again, these are not recommendations. This is just a thought process. And if you're visiting Trader Lab, I just want you to think about these things. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab a pen and a piece of paper. I'm going to give you a couple notes, a couple statistics, a couple items, some things so you can understand a little bit about Trader Lab if this is the first time you're visiting. And if you're back here, and you're coming back again to visit, thank you so much for stopping by the Trader Lab today. Also, please remember these streams are available exclusively to Bookmap Discord Trader Lab participants to dissect, reverse engineer, review, as well as a library of PDFs of these structured trades, which you will be able to see. The PDFs look something like this. They are available to everyone. Explanations, circles, arrows, targeting. These are live trades I've taken over the years. Some of this was developmental stuff I was doing with Bookmap developers. There's all kinds of stuff in here, and I'm not a vendor. There is no cost for this. These are just things I put together. This is from 2020, and I just put them together because traders were saying, "What are you doing?" I go, "Well, here's what I'm doing." Now, I have been trading going on 45 years, both professionally and, of course, sitting out here with you guys. And I will say that trading does not have to be complicated. It is not in complexity. It is actually in simplicity. And I know that seems somewhat contradictory, but trading is not complicated. What is complicated is how we deal with randomness and uncertainty. That is complicated for us. Now, I want to show you a couple things. Those of you who follow the stream, if you remember yesterday, we had a target. One of them was at 60, which if you remember, I was discussing a trade that I exited at 60. And then we had another target up above in the 70s somewhere. There. That's yesterday's high of the day. Now, I want you to understand something. This is not predictive. This is always maybe. Trading is maybe, but it is also based on participant behavior, and the market tends to return and check behavior. You may find that interesting. And why does the market do this? Well, this is what the auction is about. Auction is not indicator-based. It is participant-based. And this is all what the Trader Lab is built on. Understanding market mechanics. Now, the thing about market mechanics, just so you understand, I don't use any indicators. And I know that's probably hard for many of you, to kind of process. I will tell you it's difficult for me to process, especially back when I was weaning myself off the typical stuff we all use, oscillators, Fibonacci, Elliott wave. I mean, I've done all that. And it doesn't mean it doesn't work sometimes. See, the fallacy I found for me, and I built trading systems, so I went much further than most retail traders get to. And that's because I was managing dollars across many asset classes. So I needed something. I couldn't do all of this. And it was swing trading and position trading. There was no day trading back then when I was doing this. Very little, I should say. So what I found was more indicators were loaded on, and I started doing this, and I ended up doing that in systems, more indicators, because I was looking for more certainty and then more curve fitting. And what it was is everything works randomly. By the way, my next target here, which is not material at the moment, we'll get into it, is 68, and then out the high of the day, not a recommendation. So anyway, and I've been narrating all these trades, I don't call trades, in the Bookmap Discord Trader Lab community. Now, let's talk about today. And now we'll get right into it. Grab a pen and a piece of paper, take a couple of notes. First of all, our open. This is yesterday's settlement price. And the RTH open is here. Yesterday's low is down here, and yesterday's high was over here. So we opened lower relative to the close inside of yesterday's range. Now let's look at statistics. Now remember, this trading is not a predictive business. What is it going to do? How about this? I don't know. Now, the fact is, everyone wants to be predictive. All our gurus out there and all the chats are we want certainty, and that's an emotional or psychological need. It has nothing to do with our business. This business model is based on gaming. That is randomness with an edge. So, if we cannot predict what's going to happen, what might we do? How about use probabilities or statistics to give us something to gauge and to trade towards, even though we know how it'll get there or even if it'll get there is completely random. No different than Las Vegas. They deal blackjack, the cards come out of the deck randomly, the gamblers play the cards randomly, the outcome is random. But over a large sample size of interactions with the gamblers, casinos do pretty well, don't you think? Even though the gamblers get paid. That's our business. That's our business model, and the Trader Lab uses an understanding of randomness and uncertainty and then stacks probabilities, and the outcome is always random. We all take stops. We all have losing days. Anything that can happen happens. Casinos, I'm sure, have days where maybe they don't make money. I don't know. But the fact is, over time, they do. So we are opening lower inside of yesterday's range. Here's some statistics. There's an 83% probability we'll get to the overnight volume point of control. That's the highest retail volume in the ETH. This is called a naked volume point of control. What that is, and a point of control just means high volume. That's where most of the volume took place. Now, why is volume important? It's because that's where buyers and sellers agree to do business, and that's where they agreed to do most of the business. And in the store, when you go shopping, a retail price is where buyers and sellers do most of the business for the specific product. That's retail, right? You go to store, you see the price. I'm paying $1 for my can of tuna. Seller's willing to give it to you for $1. You're willing to pay $1. Everybody's happy. That's a fair price. Now, in the ETH, that was the fair price. In the yesterday's RTH, that was a fair price. That's yesterday's high. That was yesterday's target. Isn't that interesting? Now, we open down here. So we have this 70% probability, and we have about overnight volume point of control, 83% probability. And the overnight mid is, and I'm not sure where that is. It got covered up. Let me see if I can find it here. Looks like 60.25 is the ETH mid. It's underneath this. So if I get along, and by the way, the previous high or low, there's a 85% probability we'll either get here or there. Well, I don't know about you. We're in an uptrend. I'm going for this one. And it's yesterday's high. What do we currently have at yesterday's high? Right now, we have a double top and a probability of getting to this overnight volume point of control of 83%. What do you think for heading north? Not a recommendation. That's why for me, and subject to your plan and in the Trader Lab, longs, 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 longs. Not a recommendation. Clueless. What's clueless mean? Can't predict. What can I do? Follow a vetted trade plan. And how do I grade myself? Not my profitability or losses for the day. I grade myself on following my plan. That's it. So now you know the lay of the land. Now let's look. So the market opens. Now I have opening structures that are available to everyone in the Bookmap Discord Trader Lab. And if you're in YouTube, by the way, please give a thumb up if you're finding this interesting. Also, there's a link in the bottom of YouTube where you can visit Trader Lab and the Bookmap Discord server, where there's a lot of additional education. It's all available at no cost. You don't need to be a Bookmap subscriber to access the Trader Lab or the Bookmap community. It's amazing to me that a company invests in traders, whether they subscribe to their product or not. In the end, if you can have the opportunity to get education and it's helpful and it helps you stay in the business, everybody wins. And if you see, quite frankly, that OrderFlow with a high tier tool like Bookmap might give you an additional edge over other retail traders, it doesn't hurt. I think that's pretty good because when you see how you might use tools, then I think possibilities potentially develop. And of course, past performance not indicative of future results. I'm trying to get to 68 here on my current trade. Come on. Sorry. I don't like to have trades on when I stream because it's very hard because I'm trying to do two separate things, and that's called multitasking. This is the RTH open. There it is. This is the opening. Call this the opening swing low. This is called the developing volume point of control. And what it is, it starts at 0. And as the market trades, volume comes in. That's logical. So this yellow line is showing me, now this is dynamic. That means it's going to move around. It's showing me what the participants think is a fair price. So think of this as your can of tuna. And right here, this is a store. It's actually a consolidation, but I think a consolidation is a shopping experiences. What's too low? What's too high? And there's my retail price. Now, this is micro. I mean, we're not even in a second. So I'm just letting you know. So the market moves away and my volume shifts higher. This is nuance. Now, this is just a way to track participant behavior. So I don't have an indicator. I'm not using them. I'm just following the yellow brick road. I call this the yellow brick road. So, and don't we all wish we had a wizard behind the curtain telling us what's going to happen? Anyway, market shifts higher, too low. Here's my buyers. This is the new retail price. I'm going to put a little thing here. And I'm doing this for you guys so you can kind of track the change in the perception of value. Remember, the auction, why do we have an auction? It is to figure out what this thing is worth. And the thing about it is it's a dynamic price discovery process. So the market can go up, and then we may find our sellers and the market can go down. Even though this is showing prices going up, it's rotational. The market goes up and goes down. So in spite of all this, I might be thinking I want to get long, which is my plan for today. I also know that based on a lower open, that we're going to get buyers who think, oh, it's a chance, it's on sale. Yes, but what else do we know? If you're in Trader Lab, there are opens, specific opening structures that I've shared. Now, none of this is mechanical. It is always random. And that is, if I get buyers in here, it is possible after we get these buyers in and they're this is called the opening swing low. Let me mark it right there. Just going to throw this in here because you do not want to forget what's under the opening swing low. Stops. So I know if I participate any time in here that I have a reasonable shot of getting taken out and then the real move. And if you look at yesterday's behavior, when we had the huge gap, and I made that stream public, it is available. You don't have to be a participant in Trader Lab to look at it. It's out there in the ozone. If you go to YouTube, you'll find it. And you'll see the same exact behavior. Except yesterday was a 40-point, 50-point gap higher. We had the move up. The early buyers got stuffed. Then in fact, it did it twice. So today we have the move up, opening swing low. So, and this is called VPOC migration. Now let's think together. Now I'm going to take you into microstructure. I'm going to spend some time here because what I'm doing here is generic to how market behaves. So if you understand this at some point, you'll kind of get it. So too low, right? Variable high volume node. Too low, variable high volume node. Shopping, this is the store. I leave it. Now, when I move away, if I don't pause, this is a directional move, right? I'm not pausing. But here, something changes. Now, I don't know until hindsight, so, no clairvoyance. Right here, so I've got my buyers looking good, Lewis. Up here, I have my buyers, but 101 buy stops. This is a stop and iceberg detector. It uses MBO data from the CME. MBO, market by order, means basically they're tagged because the exchange needs to know what's a stop, what's a limit order, what's an iceberg, So they got tags. So Bookmap reads the tags. Very useful. And this is stop divergence. Remember divergence, right? You guys know about that. Well, I got it here. So does that mean we're going to come under here? Well, we don't. We go higher. Now I got 101 stops. Oh, my goodness. What's going on here? Nada. Liquidity, nothing. I see my sellers here. So right here, buyers, microstructure, sellers. That's delta. Sellers. Where's my buyers? To keep going, I need a buyer above here. I get my sellers. This is microstructure. I'm going to label it. I'm just going to show you something. Just fun facts to know and tell. Too high. Break. Now this, I'm in multiple time frames, guys. So think of this like fractals, okay? Not time frames as you think of them. I'm not using time. I'm using volume. That's what the volume profile is about because the participants interacted here. Think of this like a 7-Eleven or you're down the street market and it's on sale. I'm not paying that. Yeah, but it's on sale. You got to be crazy. Here's the retail price. If I leave the store at this moment, this is too high. And again, I don't know until I know, But I got my target, 68. Look at that. Okay. So this, right now, let's come back. Retail, too high. This was the variable high volume node, so this might be support. And if it is, I will bounce off it. If not, I can come back around and remember what's here. Too high. Look at the symmetry. Micro high volume structure. Don't know. Break low. That means too high. Now what? This is the retail price. This shifts higher right here. This is the retail price. Now, if I break below this and I don't come back above it, this now is too high in a fractal. That says lower. This now is my support. What happens here? I got to get above this. Too high. I break below this. What does that say? Too high. Where am I going? Maybe out the bottom. Let's see. Too high. I took a long here, by the way. And I took it and I said to myself, this is a very high risk trade because of this. So I did that. And I think I jumped the gun. But this is too high. So I got long. I got a scale because this is too high. And then I'm looking to squeeze these guys. So this was aggressive. I think I might have, but it's part of my plan, you know. So where's my opening swing low? It's down here. So I get taken out of this thing. So I scratch the trade once it comes under here, right here. Boom. And, you know, there's that grumbling, you know, all that kind of stuff you do. Notice too high. So what happened here? Too high, break, long, too high, break, got to hold the microstructure here, test. I'm thinking I'm getting a quote away with it. That's still too high, break, can't get back above here. Trade is really dead here and then out. Okay. Now back here, too high. What do I know? Opening swing low. Forget about it. Not interested now. Now watch. So I take out the opening swing low. Now down here, I really don't have anything. So I posted this in Trader Lab. Once we took out the opening swing low, and I see microstructure was right here. So I have my sellers, it's going to zero. I see a buyer. I have this consolidation. Now this takes practice, and I don't know where the low of anything is. So microstructure, and this is a suspect. I don't know anything about this. This is where my sellers were active. My buyers are here. They're under the bus. Sellers, buyers here. So I got buyer, seller. I'm above these sellers. So they were absorbed. I come here. Right here is where my sellers were in control. This is it right here. So I have this. I have a suspect. I have my sellers in control. My buyers take control here. Right here, I get my buyer. So I'm in the long here. My stop is here, and this is my scale. Now I'm in mean reversion. Watch the trade. Now, where am I trying to go? Overnight mid, which I think was right there. So this is my first target, 59, and I always leave a little for the sweeper. And then it's up here. Yeah, here, VPOC migration. What does this tell us? Let's take it from the other direction. If the market now is going higher, this now here is too low. This now is too low. The pullback is another long. Where am I trying to go? Here and here. Statistics. This was the long trade at the time. And then I was done with the trade. So this is Trader Lab. This is just what it is, And then this is still an open target, as you know. And then I started taking longs, and I'll talk about those, but I'm going to come up and see if you have your questions. In other words, by longs, after this, then it was rotational trading. We changed context into this two-sided abuse. And for me, it was longs only. So it was trying to get longs to come back because now we have a double top. This is yesterday's high, and this is today's high at the time. So what is that? A double top. Many retail traders think a double top is a strong top and that it's the end of the planet. It actually is weak. So that actually makes this better for me to be taking longs to take out yesterday's high. And the overnight volume point of control, remember, has an 83% probability, as well as the previous high or low to take it out, has, or test it at least, but then it's a double top. But with the overnight V pocket 83%, past performance not indicative of future results, you got to vet this for yourself. This is the next target. Then we have this, and we have the ETH high. Now, are we going to get the ETH high? You're going to ask me. I'm going to say, I don't know. We may never get here. We may still fall out the bottom, and we might get to the overnight low. Both of those have probabilities that are together. It's about 90% probability. And there's another piece. At 9:30, the first hour's high or low, which I think is here, the first hour's high has over 90% probability it'll get taken out. Everything is suggesting to me north of the border. Then where to? That's another thing. This is another target, by the way. Okay, I'm coming up for oxygen. I need an oxygen tank, and you guys have questions. And thanks so much for visiting Trader Lab today. Hope you're getting something out of this. If you're in YouTube, please give a thumb up. It's helpful to the stream down in the bottom. How we doing? How we doing in the Bookmap Discord Trader Lab? And how you guys doing in YouTube on this Friday? I hope you're having a decent day. Trader Lab, hope you guys are having a decent day. I posted a lot of this, most of it, in the Trader Lab as the context was developing. How do you deal with this? I ask myself, how do you deal with it? I figured out a long time ago that I can't predict anything. Very early on, we come into the business with beliefs, and I'm sure many of you who are listening to this, especially if you're not part of Trader Lab, and you're just visiting, by the way, thanks for stopping by. You think we're trying to predict what's going to happen next because our nature is to be able to predict, right? I mean, that's okay. That's the outside world. In this world, we are it's like landing on a different planet because the things that work outside do not work here. The casino business is not the business that's outside the door. It's the business inside the door. Inside trading, we are in a random environment. So we're constantly dealing with uncertainty, doubts, fear. And let's just call it what it is. We are fearful because it's uncertain. How can you have confidence when you're fearful? Think about it. It's a conflict. So how do the casinos develop confidence to play the game even though the gamblers walk out with the cash? See. So that's what I kind of came to. And when I started trading, nobody talked to me about this. It was always, back when I started, just so you know, it was classical bar charting. Those are all measured moves. So I came into trading with the belief that all you had to do is be a better predictor, right? I predict it's going to do this, or when these 5 things line up, these indicators, it's going to do such and such. And I saw the randomness of the market, and my crossing over of this, that, and the other thing would work. That's the problem. They work. And you're going to say, well, that's not a problem. I'm going to say, well, how about if it's a problem if he has no edge? And you're using random inputs, and sometimes it's a little of this, it's a little of that, and sometimes it's all of it, and sometimes it's 2 out of 5, or you know what I'm saying? They don't play blackjack with 10 cards, sometimes 6 cards, another time 4 cards or no cards. They always play them with 7. no matter what the outcome of the next hand is. We don't do that. How can we expect a different outcome if we cannot measure what we do? And the fear is brought on by the randomness and the uncertainty. If you have statistics, does that take a random nebulous behavior like rotations and participant behavior and give it some tangibility that you can touch? You can touch a statistic. You can open your trade plan and see a statistic. If you're just playing it, quote, like a video game or seat of the pants, you're the gambler. And you're going to have winning trades. You get rewarded for that behavior. But based on the failure rate of retail traders, which is estimated over 90%, who cannot sustain a career or even develop one in this business, why do you think that is? And the other part is, are you doing what they do? Taking random behaviors and random structure that you observe and then working on making them fit better, which is curve fitting. And you may never have an edge with those processes, but you will have winning trades. That to me is the conflict, and what keeps many retail traders going down paths that do not lead to sustainability in the business. It's how many of those aha moments have you had? I've had, I can't even count them. Aha moments, get excited, see something work, tweak it a little bit, start trading it, and then you still have some winners, but overall you're still going in the wrong direction. I coined a phrase for it, and it was based on what happened to me, called Trader Groundhog Day. You keep doing the same thing, you keep waking up in the same place in spite of all your effort. Would it make more sense to take that time and effort and energy and maybe put it in a direction that's in alignment with the environment you're in, not trying to fit the environment you're in into your psychological and emotional needs? We all need to be right. We all need to predict. We all need to, quote, get rewarded and approval from the market. How about if that's not the business you're in? If you were going to open a business, would you want to maybe be in that business and not try to make it into something else that it isn't? We try to fit the business of trading into a box we're familiar with. Gives us psychological comfort. But that's not our business. Our business is discomfort because of uncertainty. So we have to understand what drives us to seek certain things. Also, our emotional wiring that's in conflict with this business. Those are all the things we cover in Trader Lab. Do you guys have questions, by the way? Please post them. Also, if you're in YouTube, please click the thumb up at the bottom. It's very helpful for the stream. Also, if you have not visited the Trader Lab, there's 60 PDFs of these structured trades you can download. And the idea is not to replicate what I share, but to understand it. Because then you can take one setup, you only need one, and you can reverse engineer it. Now, let's look at this thing. Now, once we get our targets up here, and there's no way to know, let me explain, no way to know that we're going to stop at yesterday's high. It was a target for me on this first trade, and then, wherever. So if I'm not in the prediction business, I've got a couple options. I take my structured trades, and I take my stops, and I manage my trade because I cannot predict anything. This thing about being right is not what this is. What is being right? Can you define is it a winning trade, or is it a trade plan that has an edge that you execute per plan? How do you measure yourself? If you're looking at P&L, that's not where it is. The P&L is the output of a vetted structured plan that has a statistical edge. That's where this starts. If you follow your plan, no matter how the day turns out, that's a winning process if you have an edge. The fact that the edge shows up randomly, it's just part of the business. It's called overhead, cost of production. If you've ever thought about being in a business, or you have been in business, or you've worked in a business, whatever it is, there's expenses. You got to pay the electric bill. Well, in the casino business, they pay the electric bill, the cocktails, the ticket to the buffet for you, and pay the gamblers. And they still build larger casinos. And if, by the way, if you're a great gambler and you leave your dollars, they'll give you tickets to Adele. Be sure to ask for the tickets and get the ticket to the buffet if you're a gambler. So they're doing that and making a profit. They can't control the outcome of the games, but they control how they play the game. And they play them exactly the same way. It's called a structured game with anchored inputs. In the Trader Lab, it's structured trades, anchored inputs. Same. I hope that's making some sense. And if you're waking up a trader Groundhog Day, then you're experiencing what we all do. Taking random behaviors, observing them, saying, that looks like a good trade, and then you do a little tuning and tweaking, and then now you start trading it. My friends, that is not a recipe, at least in my experience and opinion, for longevity. That is a recipe for typical retail trader behavior. Write this down. Think like a retail trader. Don't act like one. That's what they do. And that's great. Except it's not great statistically for them. Why? Because it's not sustainable. And again, I'm not saying it won't be sustainable for you, but we all think we're special. And I got to tell you, maybe not. Maybe we're just like everybody else because we're doing what everybody else does. So the question then is, do you want to continue doing what everybody else is doing, and continually wake up with Trader Groundhog Day? I did a stream on it, a webinar, and all these webinars, there's a select library of webinars that are available to all of you at no cost in the Bookmap Discord Trader Lab chat, as well as those 60 PDFs of these structured trades. Now I'm going to show you more trades if you're interested in them. So we have the Michigan pre come out at 9 a Central Time. That's a biggie. So I'm sitting in here and I got my targets. I'm out of my trade. Now I'm looking to put more trades on. Okay. And the market goes into, now we have, remember, we hit yesterday's high over here. That is a double, I'm sorry, it was over here actually. It's a double top with yesterday's high. So I know I got a double top and I'm looking for this to get taken out. So everything I'm doing is based on longs. So I come back here and I don't remember, I'm not going to go back and look at all the trades I took, but I'm going to tell you my trade plan at this point. I'm thinking the low, because we took out these guys, the opening swing low, that all I want is longs. I want to be in alignment with the trend, but the condition of the market has changed from directional to rotational trading. This changes. It's called mean reversion. And the joke in Trader Lab is, yes, it's mean. Now, let's come back. This is the retail price. Remember, shopping. What is too high? Let's come back here. Remember, target, microstructure. I'm going to put a little line in here for you. This might take a lot of time. I think I want to do it though for you. I want you to see structure. Now, if I don't use indicators, I got to do something. So I know right here, chop, chop, test yesterday's high right there. I got an open target there. So for me, my next target was here, high probability. And then, so right here, I see my seller. Now, let's go a little further. This right here is a distribution. Let me just show you what it looks like. Now, in the auction, this is the volume profile. Now, this is the whole day as it's developing, and this is only what's on the chart. So, and think of this like going down in time frame, or I think of them as fractals because the clock does not has nothing to do with this. This has to do with participant behavior. That's a big differential. So I know time frames, I get it, but I don't use the clock. I used to do that, and I don't, because what I need to know is this. Because right here, hey, we're going to the moon, except we break below this behavior. What else do I see? The green bubbles are delta. Delta is aggressors. Oh, that's nice. Okay. Buyers. Buy stops. Buy yours. And this is the absorption detector. I'm observing absorption. Who's taking the other side of the aggressors? Who's selling into the stops? The iceberg, selling iceberg, selling iceberg, selling iceberg. Now that doesn't tell me that we're not gonna, the buyers aren't, it's like Pac-Man. Are these buyers gonna consume these sellers, or does it happen the other way around where the sellers consume the buyers? These are passive. These are aggressors. And a buy stop's an aggressor because it's a market order. So I see more buyers. I come up here. I see my buy stops. I see my icebergs. And then what? I break below these buyers. That tells me trouble right here. So let's look at this. In the microstructure here, think of this like this is your consolidation. All what the market does in all fractals or time frames is it moves directionally and then it'll consolidate. And in a consolidation, it'll pause. It can go, okay, that price is still too low. Let's go, Lewis. Get in the car, drive away. But if it gets in the car and leaves, then it's saying potentially at this time this price is too high. I see we're going higher. We've gotten our overnight volume point of control. We've currently taken out the first hour's high. We've taken out the overnight volume point of control. And our next target, not a recommendation, is this. Not a recommendation, just saying. Anyway, too high. Break low, pull back to this. This is a consolidation. It's an auction. That's the price. This is the store. You leave the store. I'm not paying that. I'm out of here. Leave. Come back and check. Too high. I'm out of here. So this sets up the following. Exit stage left or a short for mean reversion. Now for me, no shorts. I'm going to show you though. And where's the stops? Mid and VWAP. So I know this is too high. I know I have a double top. And I know everybody and their brother is long. So now I'm coming down to what? Variable high volume node, outside edge. Now it gets funky. So now I'm going, okay, I'm just blowing everybody out and the context has changed from directional to rotational. So now I'm saying to myself, I got a weak high. I've got a stat up above on top, overnight volume point of control. I got yesterday's high, I got a double top, and I got targets above. What do I want to do with this? I want to get long. This was my opening swing low. It is vulnerable. I have to be aware of this. And I have my current low of the day over here. I got my open here. Okay. So now what am I going to do? I'm going to try to get long. Where are you going to get long? Outside. This is where the retail price is. So if what's above is too high and I come down and check this, I can mean revert. Now, here's a problem. This is the mean. But all I did so far was come down from the top back to the mean. Now, the other part of this is I can come out the bottom and come back here. So in the Trader Lab, I posted my next trades. They were the following. Come out well. Longs only so far unless it breaks. If I take this low out, I already posted, I said, if it takes this out, I'm getting long back to here. The other part of it is if I come outside and this price in this fractal is too low, it's going to be a long. So I have retail here, and then these are also retail that I left behind. So these are all reference points. So I come down here. I'm going to show you the trade. I see my microstructure. It is right there in alignment with this. So what I did is I fell out of all these distributions. Too high, too high. This is a low volume area. I break below it. This is my next retail price. And if I come out here, it's out the, fall out the bottom, take everybody out. And if I come in, I get long. So it's longs. So back here, I return to the mean from the high of the day because this now is the mean. And if I can break under and return, or I can come here and go back. So this sets up a long for me here. So I take a long. Let's look at it. This is the microstructure. Let's look at the micro. This right here is your microstructure. This is also a previous microstructure that we took a long off of. So all I'm doing is I'm using the same behavior. So this was too low previously. I come under it, get some stops out. I have another microstructure. My buyers take over. I now have a consolidation here. I come break high. Sellers are absorbed here. There's my buyers. I test. Long again. Pull back. This is now too low, right there. You can see, I'm going to make another little mark here. You can see the volume here, here, there. This is the retail price. It moves higher. That is saying potentially this is too low. This is all I'm doing is following the volume and using structured trades. And I'm doing the same process in fractals. So this little microstructure is the same as this. This high volume that's happening right there is the same as that, is the same as that. They're just fractals. In other words, think Russian dolls. They're inside each other. So long, stop, scale, hold, pullback, potential long, scale, or wherever, potential long, wherever. VPOC migration, potential continuation. Let's see. Pullback, where? Here, potential long. To here. That was the last trade I took. Oh, there we go. Next target. And I got out of it, so, 68, wherever 60. Oh, here. That's me. And streaming, not on it. This is the next target. And all this is in advance and on the chart. Questions, guys. Thanks for your patience. Hope you're doing okay. Thanks for visiting Trader Lab. If you're in YouTube, remember there's a link down there. At the bottom of YouTube, you can click. There is no cost to visit the Bookmap Discord Trader Lab if you're interested in understanding market mechanics, how the market works, why it does what it does, statistics, structured trades, and we also give you a helmet that you can wear also because it's all random. And also, how do you manage your emotional states? That's also focused on in Trader Lab. Why? Because fear disrupts our intentions. I call it Jekyll and Hyde. You know who Hyde is. That's the other person in your head that's whispering in your ear. I'm not sure about this one. How about you can't be sure about any of them? Oh, I think I took a stop on the last trade. I'm not so sure. And you skip the next one, which would be a winner or a loser, because your job is not to be trading the last trade, to be trading this trade. But you don't. Oh, I got stopped on the last one. I had 5 points in profit and it took me out and I took a stop. I'm going to move my stop much tighter this time. What does that have to do with this unique moment in the market because of what happened last time? That's what amateurs do, not what professionals do. That's what retail traders do, not what professionals do. If you want to be a professional, you got to differentiate your behavior because you're being driven by the same emotions. By the way, we all feel the same thing. Not what you feel, it's what you do. Because what you do, all of the do is figured out before you're in the market. In the Trader Lab, now this was our resistance up here, remember? That's where our sellers were. Remember? Once you take that out, what might you do with that? There's our sellers. There's our reaction to these guys. And what happened here? Let's look here. Let's just take a little look under the hood. This is where our sellers were, and we came across. There's an old saying in trading, resistance becomes support. And we have our double top We're up here. We come down, and if you break above this, isn't it a long to here? Or it's nothing because of the range. This is up to you. This is the next target right there. It's on the chart. It's on the chart yesterday as well as this was on the chart yesterday. So this is, now we got to the next level. This is a potential long, and this is advanced. Right there, stop would go under the micro volume. Come on, let me show you. Here. So right here, we know this is a double top. We have a statistic here over 82%, and we have this. Is this a long you would take? I'm just asking. Here's your volume. Here's your break. Now, this is kind of a breakout trade. I'm not saying anybody should take it, but it's a 5-point trade. Could be a scalp to there or nothing. I'm not, and this is not necessarily a trade I would take. I'm just telling you this is structure. For me, I'm just going out to this. That's it. Now, just to give you something to think about, next probability, ETH high. I'm going to give you a statistic, and you have to vet these for yourselves. Past performance, as you always know, not indicative of future results. There's approximately a 93% probability we'll either take out the ETH high or low. I'm leaning towards the high. What do you think? Now, that's not a recommendation, but let me see. It's about a 50-50 probability. But now you're going to say, well, Tom, how can it be 50-50 or even less? It's like 49% approximately. Why would you go for this when you got a higher probability of taking the ETH low out? Here's the answer. What is the context of the market? It is up. What happened yesterday? Big gap. What is the market anticipating? Rate cut in September? Party time? Right? Happy days are here again. You remember that? That was, I think, right before that was in the 1920s. I think that came out right before the big stock market crash. Just saying. Fun facts to know and tell. You can Google that. When was that song popular? Roaring 20s, I think. So, next target. Why is this the next target? It has a lower probability because, now, but this had an 82%-ish probability. Why is that a 49% probability? Doesn't matter. You know what matters? Context. And what's the context? North of the border, Lewis. So you manage your trade. So where does this trade fail? Well, let me give you some ideas. First of all, I don't know what's going to happen. Here's what I know. This is too low. What else do I know? Let's get into microstructure. This is too low. Micro high volume. What is this? Too low. I had buyers here, sellers absorbed. That's a selling absorption. You see all the icebergs? They are selling. That's fine. They are being consumed. Buyers above here. Sellers take a shot here. No bueno. Buyers absorbed this seller. Sellers were absorbed by the buyers. You can see it right here. Micro high volume structure. Let's put a little line in here. Now, this is micromanagement, not a recommendation. Let's look a little further. High volume structure. Sellers are here. They're still being absorbed. Icebergs are here. Little high volume structure. Sellers are here. So you could be trailing back here, or you could be trailing under where the sellers last got absorbed. Here, you could be trailing below here. And you will be taken out. It's just a matter how you want to. And here's high volume structure. Now, what this can do is, as we're marching up, it can turn into rotational trade and do this, like here. And it's still viable to go higher. Or if we fall out of this, which is this is a consolidation. So what the market does, it gets directional, and then it can get rotational. It can start doing this. And then it'll either release that energy and go higher or fall out. How you manage the trade, you have to vet, you know. Now, the fact that this came down here is not an issue. Why? Absorption here, absorption here. Let's think, I want you to think rationally about this. If we had the reason the market went higher when we see our sellers is that, and the sellers are the icebergs and stops, is that they were absorbed. If we rotate down, are the buyers here still going to absorb? If they do, we can go higher. Now, if we come down here, we can fall out, and then this trade would be over. It doesn't matter. Remember, this was our target. So now what I do is I trade the targets, but also in between I manage trades. But I would be so this is the target. Remember, so this is the end of it right here. But let's assume you think it's going to a bazillion up here. It's going here. So what happens? If you're managing the trade, you'd be out of the trade. And now, what are you going to do? You're going to be using, subject to your plan, you're going to be using counter rotations. So if we fall out of this, which is a distribution, now you have your high volume there. So what it can do now is take stops, and we don't know how far out, and this outside is out here. You'll notice when we came up here, it created low volume, and now the high volume is here. So the market has a tendency to come outside, take stops. We may only come out here, or I don't know. I can't predict. So what I do, if I want to take a continuation trade for the target up above, well, first of all, this becomes something called mean reversion in a fractal. So what that means is, now the stops are under all these swings. So I have to let the stops come out and look for a triggering structure. This becomes much more challenging because you're going to try to pick the outside edge, and this is where you're going to try to go. So if you're going to pick outside edge, you're trying to come outside somewhere. Now, right here is the IB high, the initial balance high. We have a trade in the Trader Lab called the IB continuation trade. It is out in this area. And it doesn't mean if we come under here that we won't just fall, because there's going to be stops. So we have a structured trade. It would be out here someplace, and it never has to come back there. Take stops, and then if we find our buyers, to come back to here. That's a structured trade. It's called the IB continuation trade. There would be no short for me in this configuration. If we break inside, in theory, we could come back here and here. But I will tell you just, and this is not a recommendation, I can't make a trade recommendation. I take stops as well as everybody does because it's overhead and cost of production as part of trade management and protecting your account. So there is no magic, there isn't like some holy grail that somebody has out there and like you just have to find it. How about the holy grail is inside you? You have to extract it from yourself. You already have it. You just haven't accepted what this business is yet, and then how to organize what you see in front of you. That's really what the business is. The casinos have their games. Our games are trades, or structured trades, or setups. That's a game, if you will. And if you approach it, not that it's a frivolous game, but that it's a statistical entity, and you can extract that statistic, and then you overlay these processes with an order flow tool that helps us see the change in behavior right here. And if we understand that, we know, if we understand how the market works, this is the obstacle. And if you got long, which is no range, this is your scale. Because it's the obstacle. What does it say? Retail. Is this on sale? What do? In a consolidation, we return to the mean. This is called mean reversion. I cannot take this trade, even though the auction could care less about the range. You see, in other words, this is a structured trade in the Trader Lab that is not qualified. The structure is based on market mechanics, how the market works, and the market works from here to here. It comes outside to wherever the sale is, and then can rotate back to the retail price. It could come up here. Where is it too expensive? And then rotate back to the retail price. This is rotational trading. It is a context inside a context. What's the context? Up. What is the current internal context in the more fractal? Rotation. How do you trade rotations? Outside in. Where's the outside, you ask? Good question. That's part of the joy. So for us in the Trader Lab, out here and somewhere or not. And if this trade comes out here, take stops. I have structure over here, this little micro high volume right here. I'm going to mark it. I also have structure here, micro high volume, but the stops are going to be under here. So I got this and this. And if it doesn't come out to my location, I don't have a trade. This is mean reversion. So it can keep going, right? I have a target above. Now I have other ways to get into this. I do not have a qualified trade here. And the only reason is because of the range. So in mean reversion, if this was further out, it is a trigger to there. Not outside, no dough. No, no go. Questions, guys. And please give a thumb up if you're in YouTube. Helps the stream. There's a link in the bottom if you want to visit the Bookmap Discord Trader Lab community. There's 60 PDFs of exactly what you're seeing here that you can download. You can look at them, reverse engineer what you see, pick one structured trade. And there's a library of webinars. It's all available. There's no cost. You can visit the Bookmap Discord Trader Lab. And not only that, in the Bookmap server, there's a lot of additional education. Large cap, small cap stocks, options, crypto, OrderFlow, of course, with a high tier tool like Bookmap. How do you use OrderFlow? Does it give you an advantage? I obviously think it does because it does for me. When I just see price, I don't know what's happening in price. That's the whole thing about OrderFlow. When you're looking at your little candle, what are you looking for? A wick? I mean, I don't know. You know what I mean. Well, what do I know right here? I know here sellers were absorbed by these buyers. I see my buyer. I see my sellers here. Why isn't the market going down? Absorption. You see my buyers? I see that with the order flow, not waiting for a candle or something. What do I know that happened here? Sellers were absorbed. What happens if I got here? Would it be a viable long? Yeah, it would. If I have the range. And this is a structured trade. It's covered up here, but it's called the IB continuation trade. It is a long to here, and then the target is there. Trader Lab, not a recommendation. Now, I'm going to say this. Now, this is not a trade I can take. At least, let me put it this way. It's not a Trader Lab trade. It's a maybe trade for somebody. Let me show it to you. Let's look at the structure. This is too low, okay? There's your structure. Break high, buyers in control. I pull out here. The structured trade is here. But what do I get? Break high. What did I hold? This. I'm going to show you now. I'm going to get down in fractal, and it is in hindsight, but I can't take this trade anyway. But I want to show you the structure because that, I think, has value for you guys. Just make this a little clearer for you. So here, this is a consolidation. You can see it here, okay? The high volume is there in here. The breakout, too low. Do our thing. This becomes too high, right? Whoop, can't do it. This is too high. This is the high volume. So this is the mean. So really what we're trying to do with this is come out here to here, out the top, okay? Because that's the trade. This is a structured trade. Now, it didn't get there. It got here. So now And this is something where it's subject to plan. And I'm not going to I don't make trade recommendations, but here's what I want you to think about. Structured trade in Trader Lab is located in here, down to here and in here. Okay. We get them to the top of it. Now, and again, we don't know until hindsight, but there's my buyer. There's my microstructure, and I'm against this consolidation here. I have alignment. I break high. I pull back to the micro volume right there. Let's look at it. Now, this is very fractal, and what I do is I'm trading Matryoshka dolls, you know, the little ones inside each other, you know, the Russian dolls. All I'm doing is very simple. I'm taking the same concepts of volume and rotation, like what's a fair price, and I see the same thing everywhere. I see it there. That's the same thing. This is the same thing. So what I'm doing is I'm reading the market. It's a language of participant behavior. So I don't use indicators. Why would I wait for an indicator to do something? I already know what happened here. This is too low. That's why we left it. So if I check it here, that's a potential long. If I check it here, it's a potential long. But my setup is there. I come near it. Micro volume is here. I break high, trigger, pull back and test. My long is here. Now here's the problem. My obstacle is here. But I can also scale above this, ahead of this volume here where the sellers took. So if I got long, I'm not saying anybody should do this. I'm saying you could do it. And the reason for taking the trade is that. Any questions? Hope you're getting something out of this. But guys, I'm showing you the trades. I'm not saying they're trades you should take. I'm saying this is how you can dissect and understand how the market works. Remember what the stream is about. How does the market work? Why does it do what it does? And how, at times, might you get in alignment with it? This is the alignment. Then it's the structured trades that are in alignment with the alignment, if you know what I'm saying. And then it's statistics for targets, which is why that's the next target. Let me see if I got anything above here. Well, you feel lucky, as Dirty Harry would say. This is the next target. This is an extended target. It's not a recommendation. And then the market can do anything, you know. Remember, the way I trade, and I'm not saying it's the best way I don't know what the best way to trade is. I just have to find what aligns with my psychology. I trade the targets. I found that I can't predict anything. I'm literally clueless because it's random. So I've adjusted what I do to statistical probabilities, just like the casinos do. And I let as they say, let the cards fall. What do they say? As they may. Random. So I just trade towards targets, and in between I have trade management based on fractals, based on auction. So this is too low. Break high. What do I have here? This is too high. Notice the behavior. Break, exceed it. So the trade can be managed under this volume. And if I get taken out of the trade, I just go, okay, that was nice. It just doesn't matter. Now, here's the other thing. If you want this, what is that? Do you keep your stop? Well, by the way, you could leave your stop under here. It doesn't matter. It's up to your plan. If you get taken out of a trade and then it goes here, what do? Do you know? This is where trade plan comes in. The Trader Lab is a community of traders that have come together to leverage their collective experience. It doesn't matter what you do, how you do it. I think I mentioned yesterday, if you got a Ouija board and it works well, bring it over, show us how you use it. We used to keep a magic 8-ball on the trade desk when I was managing funds. And it would be like, what do you think, Tom? And I go, well, I don't know, Louis. What do you think? And let's ask the magic 8-ball. Our guess is as good as yours because it's only a guess. So if you can accept that it's a guess because it's random, doesn't that remove the burden from having to predict and then having all the fear looking for confirmation? I have found, for me, I don't know. So if I accept I don't know, then I'm saying, well, what's my risk to basically put a coin in the slot to find out. That's it. Does my coin in the slot in these conditions, based on my plan, have an edge? I got to put the coin in the slot, and I got to be willing to pay to play. And if I pay this time, that's okay. Other than how I emotionally feel about it, it has to be okay, or else I cannot play. And it's not a game, and this is not a video game, it's a business. But I know in my business I have overhead, and there isn't a business out there that doesn't have a cost of production. Losses in our business, assuming we have a statistical edge, just like the casinos, losses or payment to the gamblers is overhead and cost of production. Can you reframe it? Now, the thing is, your emotions are not going to change, but how you prepare yourself psychologically for it and how you approach the business, you can learn to manage that. And that's what Trader Lab is about. Trader Lab is many things. It's certainly not the Holy Grail, but it is probably different than most things you're going to run into in your travels across the internet with all the gurus and all the chat rooms and everything else. And I'm not saying there isn't good value out there. Obviously, there is. The problem, of course, is you may run out of time and dollars before you find what works for you. I will say that many traders in the Trader Lab have advanced their businesses by what they've gleaned from the Trader Lab. And it's a great place, I think, for some of you, not all of you, to develop and improve your game. Trading is a business, and trading takes time. There is none of this plug and play nonsense. It does not exist. Don't do what I do. Don't do what anybody else does. You got to find what resonates with you, what aligns psychologically. There are some traders who are going to be getting long, getting short. I mean, I couldn't, but they'll sell this, they'll buy, they'll do whatever they do. And if they have a skill or can develop an edge with it, then that's their business. It's not my business. My business is different. I just get long today. Other days I'm trading both sides. Other days I'm short. Other days I'm short in the morning and long in the afternoon and then back and forth, back and forth. It's all a function of my plan and attempting alignment. Remember, this was a potential long, not qualified. Where is the qualified trade? It's down. You see this here? This is a big consolidation. What's out here? This is a low volume node. Low volume nodes are places where there was no volume because the market ripped through it. It was in a hurry. These are outside edges and they're swings. What's at the outside edge of a swing? Stops. So if the market comes down here, I don't just step in front of this thing because I'm looking for it to potentially come through it and come to the IB high, which is under yesterday's high, the initial balance. If I pop under here, and I'm going to look at this also, this high volume area. If I come under here and then come back above and I have a triggering structure, then I'm coming here and I'm looking for this. If I don't get back there, then where have I come? This is an aggressive long entry here, retail. So I'm just mentioning, these are not trades and I'm not calling them. I'm sharing structure. This is an aggressive long, not qualified. Break high, pull back to retail. If, and this is the big question, this is too low and we take this out, we're going here. If this here is too high and I come below here, then I'm coming here. That's what I know. And I'm not predicting. I know it because that's how the auction operates. What I don't know is, are we going to take these guys out and take these guys out, which right now is my support, take them out and then come back above. That's a long. If I don't get below this, which we just tested, and I continue higher, this could be a long here, but it's much more aggressive because I can still do this, right? Rotate. Does this make sense? Can you kind of see the structure of the auction, guys? How are we doing in YouTube? Please give a thumb up. You're finding this useful. Hope you are. I can't predict anything. You know what? I figured out that I know I don't know. Doesn't that release you from being right if you accept you don't know the outcome of the next trade? Casinos can't predict the outcome of the next hand. How can we predict the outcome of the next trade? I mean, just think about it. So don't try to. How about this? Try to stay in alignment with the trade and accept the random outcome. Remember what we have down here. We have stops here and here. We have our outside edge here. If we come down here, we are looking for not a trade, by the way, but a potential long. It's a structured trade. And then we'd be looking for back here and to here. So if I got a long, and this is definitely not a recommendation, because if the structure doesn't show up in the right place and at the right time, then I won't have a trade. I'm not mechanical. I anticipate locations. I don't just step in front of them. I need a trigger. So I know this is too low. There's the high volume. I know this is a outside edge. I know this is the IB. The ideal location to evaluate is here. I also know this is support. So I know if I got long out here, I'd have to scale here. I'd be hanging out. My stop would need to be under here, and I'd scratch the trade or tuck it up under here and be willing to jump out the window with it. My broker sends me a gift basket. If I hold this and can clear this, then I know this is too low. Until I know, I don't know. Structure. Hope you're finding this interesting and useful. By the way, Trader Lab, this stream will be available exclusively to you over the weekend to reverse engineer, screenshot, and do your thing. Now, the other thing I mentioned in Trader Lab, and I want you guys who follow the stream on YouTube, the open is very important, how we open. Today's open was very similar to yesterday. The difference is where we opened. I mean, we had a big gap. Today we had what's called an internal gap. So we opened in range, but we gapped under settlement. So we were below settlement, an internal gap. It's still a gap rule. So in a gap, there are certain opening structures, and I have shared in the Trader Lab, I think 5 opening structures. When I was talking about the opening swing low and how that was a setup potentially to take out the early buyers and then to get long for the true move, we had the same exact thing yesterday. The only difference was yesterday I did it twice. So we came down, took out the opening swing low, had a long, and I think that was okay. Then it came down, took it out again, and then the real move. So it did the same thing twice. Same thing today. That is part of Trader Lab. Those specific behaviors, handling the opening trades, all of that is part of trade planning. So, and the things I share in Trader Lab are things I use for myself that I developed over the years. There's no secret sauce, you know. There is something called a trade plan, and I draw out by hand what do I anticipate, so I don't get myopic and get impulsive, which we're all subject to. Oh, click the mouse. Well, your mind will focus in myopia. Like, why are we not at the moment breaking this? Because it's support. If we come under, where am I going? I already know this. And I'm not predicting it. I know behavior. I also know if I don't come below here, what are the shoppers? Let's come back to the store analogy. What are the shoppers saying? This price here, the high volume, which is where our can of tuna is in the S&P world, is too low. If I can clear this, hold this, then I'm working on that. That's it. Questions? This is Trader Lab. Hope you're getting something out of this. I don't believe trading has to be complicated. I believe, and it's just my belief, it doesn't need to be yours, anybody can learn how to trade. I believe if you come to Trader Lab, you can learn how to trade. I'm not saying you will be able to, because you got to do the work. And unfortunately, you want to have a career in anything at a high level, You got to put the time in. And the time is not spent tweaking indicators. That is not where the time needs to go. You've probably done that already, and that might be time that has not been spent in a productive fashion. Trader Groundhog Day. Trader Lab can help you understand how the market works, why it does what it does, and why order flow is an important component to all this. Because I can understand what happened here. I'm not waiting for a candle and something, to eventually close. That's price-based. I am looking here. I understand what happened here. Why was I looking for it to come back here? That is not going to be shown by my candle. It is shown by order flow and market mechanics and the auction. Why did the market come back here? Right there. And all these are on the chart, right? Why was this along here? Even though we wanted it to come a little bit lower, why did I say it was along? Because I can read the message, the language. This is a language. My interpretation is not indicator-based. It is participant-based. And our indicators, and there's nothing wrong with them, except they are translators, like Google Translate. Well, does your indicator tell you to get short? Well, if you understand context, which is the whole point, you would not take shorts. You would use shorts as trade management opportunities for exits, if that's in your plan. You would use structure for alignment for continuation trades when you have a statistical target. And once we're above this, which we already are, that's the next target, statistics. And the fact that it doesn't have a high probability, think about any high of the day. If this is the ETH high and we took out yesterday's high, do you think it's and we cleared this single, which is a profile target from market profile days. By the way, I learned market profile back in the mid-'80s from Peter Stottlemyre. He invented or created it. I also shared an office with George Lane. He created stochastics. I thought, well, when the market profile came along, I really thought I landed on Mars. And I was still indicator-oriented back then, because working with George Lane in 1982 and seeing stochastics, oscillators, before MACD and some of this other stuff, CCI and all that, I thought oscillators were the holy grail. I really did. I said, this is it. Look at that. It crossed over, and now we got a trend. So I spent years working with those things, and I went into systems. Then I came across market profile. It was licensed through the CBOT, and Peter Stottlemyre created something called Market Logic School. And even back then, I paid over $1,000 to sit in a class with Peter and learn market profile. And I saw it and I said, well, that's really weird. And then I took my indicators and, well, I'm going to make it so much better. I spent about 2 years. I threw about 2 years away doing that. So I'm just saying, and we didn't have information when I started. You guys have a problem. You got too much information. There's a bazillion gurus, chat rooms. I've never seen so much debris all over the place. It's garbage, most of it. Some of it has value, and that's our problem. Well, I got something out of it. Meanwhile, you're spending money, losing time, losing equity, if that's what you're doing. I always say, if you come to Trader Lab, the last thing you do is put a trade on. The first thing you do is vet a trade, so you know you have a statistical edge. Then you wait for the trade. It creates a template. So you pick one out of those 60 PDFs. Come to Trader Lab, ask, what do the participants in Trader Lab recommend for the first one that you should reverse engineer? And then what would they do different if they had it to do over again in the Trader Lab? Remember, next target, not a recommendation. Resting liquidity. So the way I look at this is my target. I'm also using order flow. Right here in the book, there's about 400-ish sitting right in here. Might I use order flow and resting liquidity in front of my target and front run it? I might. Would you? Just a question. So right here, we're going to watch, there's resting liquidity. I'm running out of time, guys. I got about 6 minutes. This is our next target-ish. Remember, horseshoes and hand grenades. No precision. If I get through here, I do have higher targets up, not saying, anything more than here, and this is an outside target. Who knows? I don't know. It doesn't matter to me. Does it matter to you? Please give a thumb up if you're in YouTube. If you're getting value from this stream, encourages me to continue doing it. There is no cost to visit Trader Lab. There's the 60 PDFs and a library of webinars. Remember, if you keep going back and tweaking, tuning, which is, by the way, our nature, right? I did it with systems. I just did it on steroids, but it's all the same. It's called curve fitting. Why do we have to curve fit a process? How about because it doesn't work? The casinos don't change their games because they have a losing hand. You see, that's the analogy. They don't change blackjack to 10 cards because they paid somebody on the last hand or the last 4 hands. Yet we do that. Why? What does that tell us about our process? That it does not have an edge. Now, that's okay if you accept that. If you keep doing the same thing and keep waking up in the same place, that's the phrase I coined for myself, Trader Groundhog Day. There's a webinar I did on it. So you understand. Now, it's up to you. But if you want to be in the business of trading, I kind of think you got to clear the deck and maybe kind of rethink this. The thing about it is we all have experiences as part of learning. That's okay. It's what you're going to do about it. That's your choice. Trader Lab may help you. It's not for everybody. It will challenge you to change your thinking. And it's hard because when you believe something, you're going to defend the belief and look for things that support what you believe, and you're going to negate what you don't believe. It's all part of human nature. However, we have to open our minds that the things we believe might not fit with this business. Next target. I hope you got something out of this today. This is trading in fractals using the auction market theory. Why does the market do what it does? How does it do it? It's overlaid on a chassis called the volume profile, which shows us participant behavior, statistics, and understanding ourselves, managing our emotions, building the business of trading, using trade plans, and only interacting when we have a statistical vetted edge. And over time, if you approach the business statistically, just like casinos do, if you do it right, and believe me, it's not easy because we're going to push against our psychology and our primal wiring, you might have an opportunity to have a career in this business. That's why the Trader Lab exists. And if you're interested, click the link in the bottom of YouTube, come over to Trader Lab, download the 60 PDFs of these structured trades. There's a library of webinars so you can see this process over and over and over. The market is random. Something needs to be anchored. That's what trade plans are all about. Please give a thumb up in YouTube. It's the currency, if you will. Shows me a little appreciation and that you're getting something out of this. This stream is available to all you guys. If you're interested in it, this will be available over the weekend for Trader Lab participants to review, reverse engineer, make it your own, and compare it. Now, next target. So this target, you see the sellers here? This is your absorption. Trade could be done. You could have been long from here, long, or not anything. It's all up to your plan. Subject to your aggression. By aggression, I mean your aggressiveness as a trader. You could have taken that long or not. And no matter what you do, if it's in alignment with your plan, that's how you grade yourself. I'm out of time. Please give that thumb up. Remember, the stream's available to you in the Bookmap Discard Trader Lab. I'm going to make it available through the weekend for you guys. There's a lot of exclusive material in the Trader Lab. Plus, there's additional education at no cost in the Bookmap Discord server. Stocks, options, crypto, order flow with a high tier tool like Bookmap. This could be your trade management right here. and it's all available at no cost. Click the link in the bottom of YouTube if you want to visit the Trader Lab and take advantage of the additional education in the Bookmap Discord server. Thumb up on the way out, please. Thanks so much for visiting the Trader Lab. Have a great weekend, and be sure to review the Stream Trader Lab. Continue building out the business side of your trading, manage your emotions, and work towards creating a business that can sustain you going forward. Thanks for being part of Trader Lab, and those of you in YouTube who stopped by, appreciate you visiting the Trader Lab. Hope you got something from it. See you guys again on Monday.